about futures because they have no clue what it is. And really, there's nothing. Not a lot of Filipinos know what it is either. Even seasoned traders don't even know what it is. They're either Most of the traders here in the Philippines are either forex traders or um, stock traders in the Philippine Stock Exchange, and or crypto traders. And as you can see, how the crypto corrected itself. A lot of people bought at the high, and of course, it crashed. So I don't really trade in crypto because of the volatility. I have a trader coach who trades in crypto, and she advises not, and she's really good at it, but she doesn't really trade on the major crypto. She trades on other crypto coins, but she always tells me, I don't advise you to get into it. I'd rather, in fact, she's getting back into futures again. So during this session, if you have any questions, you can ask it but if you have any questions, you can ask, but if I get a lot, I'll probably ask them to hold on. Just take the notes, take the note of the question, and you can ask at the end of the session. The session is supposed to last 1 hour, and what we're going to be covering is basically the basics of what futures is and what else. Basically, what futures is and how I day trade the futures, and how it's better than other instruments that people trade. Okay. I can see right now most of the people here don't have no experience in trading, which is a lot better because most of my students are basically have no experience whatsoever. In fact, you'll see on my site sometimes I have some. In fact, Giancarlo, I just had with us 2 students right now who are their 4th year in college, and they find it really they didn't know it was going to be that easy. It's not that easy, but it's easy to learn. They were intimidated by it. So let's get started with this. Let me see if we can share my screen here. Okay, here we are. So this is Day Trade Asia. So before we go on, here is let me take off my thing here so I can see myself, or I can see the screen here. Okay. So here's a disclaimer first before we go forward. According to the SEC Philippines, the trading of futures contracts in the Philippines, as well as the SEC here in the Philippines, basically says futures trading is not allowed in any Philippine exchange, meaning like the Philippine Stock Exchange. The futures contract that are subject of Day Trade Asia seminars are exclusively traded in the Chicago Mercantile Exchange in the U.S. So basically, this is really traded in the U.S. It's basically the CME. It's regulated by the governing body of the CFTC, which is the right here. It's basically the Commodities Futures Trading Commission, and they're the ones who regulate the CME. Okay, the trading of futures contracts is highly technical and complex and depends on numerous and variable factors. Thus, any investor or any trader, experienced or inexperienced, could potentially lose all or more than his initial investment. Therefore, only trade or risk any capital that you can lose. I mean, you can afford to lose, basically. So any past performance that I mentioned here is not indicative of future results. Again, also the U.S. government required that I also state the CFTC of the futures involves a lot of risk, but also you have a lot of risk, but you also have a large reward as well. So again, same thing here. Basically, do not trade with money you cannot afford to lose. Basically, that's what it is. So what we're going to discuss here now is basically what my trading background. I began back in 2010. I was trading Forex for 3 years, and I found out that Forex, I can't not make money consistently. I did that for 3 years at part-time. May full-time job ako sa US, pero at the same time I was doing this overnight sa gabi, the Forex, and I was not making money. I was make money, I give it back, I make money. So really not consistent where I want to, because my ultimate goal was to leave and basically trade. Parang yung side gig talaga sa where I can make a supplemental income. After that, I got out of Forex and I got into binary options before I started trading futures. In fact, I was uh, I was a signal provider for binary options, and I was doing actually pretty good. In fact, I was with a company that offered me, they gave me a trading room, and I would call options for them, and they were making money. But at that time, I told my students, how would you? What if I leave this company and you guys, and how are you going to make money? And I told them, wouldn't it be better if you learn how to trade rather than just taking blindly my signals, diba? And so that's what I left. I left a company that I was doing that with, and then I began trading evening futures back in 2013, part-time then. And then currently I became a master trader for Day Trading Academy. I met Marcello back in 2013 as well. And we started a company called Day Trading Academy Philippines. That was back in 2018, went through 2019 until we got the COVID and basically shut down because we were doing classes on site rather than online. The classes in the US, the Day Trading Academy in the US, were being held online. So dito sa Pilipinas, sinabi ko kay Marcello, yung the different business model dito, iba kasi mga Pinoy, they want to be spoon-fed. And they'd rather be spoon-fed when they can actually see the teacher face to face rather than online, because I think they get scared about might be a scam. So what happened was in Day Trading Academy Philippines, we shut down, and I basically opened up Day Trade Asia. So that's what I'm doing right now. So this is how I got started with Day Trading Academy.
My name is Dominic. I'm from Chicago, and basically my background, I've been trading Forex for the past 3 years, and now I'm in the futures. I've been trading futures for the past year with another type of system. I was kind of basically unhappy, and now I've found Marcello in his Day Trading Academy, and it's where you find your aha moment. And I found my aha moment, and I just started 2 weeks ago, and I know this is going to be very successful for me, and I'm transitioning to become a full-time trader. It's better than I expected. I learned a lot, and like I said, my aha moment occurred on the second day.
My name is Nikolai.
So basically, that's how I got started there. It was a 5-day course. It was in Toronto, Canada. So basically, I drove all the way from Chicago to Toronto just to attend his class, and it was really worth it. So basically, this is what I was doing. I was one of the master traders, and I was the only one here in the Philippines or even in Asia. So basically, this is all his other master traders before, and now I'm still with them kind of, but in a more of a how can I say that? I use Marcello's systems right now. His strategy basically, and he's given me the basically he told me I can use it, so I'm using it, and that's what I'm doing right now. And also as the on-site curriculum as well, the indicators as well. That's going to be going through them as well. So this is how we started with Day Trading Academy Philippines. We're in classes all over, from Davao to Cebu to Baguio, and we were actually averaging around 20 students, between 15 to 20 students each session. And actually was doing pretty good until we got the COVID hit and we had to shut down. So a lot of students, in fact, I taught at least more than 100 students. Let me see here. There's another one here. So that's how Day Trading Academy Philippines started off. I had some trader coaches with me. Here's this guy, his name is Jerry. He used to be a Forex trader. In fact, he still trades for Forex, and he enjoyed what he learned in futures. So he became my trading coach. But now, since we shut down, he found a job. He's a coach now for a company called Nature Forex, and he's one of the trainers there. He had I mentioned to him that I'm starting off Day Trade Asia, and he said, well, once you get it off, once you get more students, I want to start teaching, go back to futures again. So that door I'm leaving open for him when I get this established once again, because right now it's really just being a startup. So what you will learn in this free course is basically the first week, it's going to be the first 3 sessions. We have sessions scheduled for Monday, Wednesday, and Friday, same time at 7 p.m. Now, if you guys can't make it, I will upload the video into, I'll see if I can create a chat room for this, okay? Either on Discord or on Telegram. I will create a chat room so I can upload all the videos there, okay? First week is basically learn what E-mini futures are. You'll also learn what the NinjaTrader chart, our NinjaTrader platform is. It's basically the platform that we use to execute our trades. And this is free for you guys. We'll start doing that tomorrow. So what I'm gonna do tomorrow, I'm gonna help you guys download the chart. I'm gonna provide a video for you guys to basically instructions how you download the chart, okay? And it's free for 2 weeks. After 2 weeks, you can apply again for a free thing, a free access to the data, but you need to apply it with a different email. That's the only thing it is. That's why I always suggest doing Gmail, because you can create a lot of Gmail accounts, okay? So that expires every 2 weeks. You get free data every 2 weeks. Once it expires, you apply again and they'll give it to you. You'll know what a tick chart is, what a difference between a tick chart is and a time-based chart. Again, you'll also learn what basic chart movements is, or basically what we call the price action. And you also know what trends and consolidations are. Week 2, you'll understand how we use momentum to trade, and also gauging the strength of the momentum during runs and also retracements. You also know what support and resistance areas are and how we trade off those areas. And one of the 4 indicators that we use in the strategy that I trade is basically the Keltner channel and the MACD. I'll show you how we use that and how we apply it to the strategy that I trade. Okay. So basically, you'll know what futures is all about when you get done after the 2 weeks. Again, what are futures? No, it's not the movie about Back to the Future. It's more like this guy's about commodities. This is a clip from Trading Places with Eddie Murphy. And this basically explains these 2 guys, him and his brother are brokers, and Eddie Murphy's being trained as a trader. Commodities traders, so basically futures. That's what it is. And this is what it is all about, and what futures is all about.
We are here to try to explain to you what it is we do here.
We are commodities brokers, William. Now, what are commodities? Commodities are agricultural products, like coffee that you had for breakfast, wheat, which is used to make bread, pork bellies, which is used to make bacon, which you might find in a bacon and lettuce and tomato sandwich. And then there are other commodities like frozen orange juice and gold. Though, of course, gold doesn't grow on trees like oranges. Clear so far?
Yeah.
Good, William. Now, some of our clients are speculating that the price of gold will rise in the future, and we have other clients who are speculating that the price of gold is going to fall. They place their orders with us, and we buy or sell their gold for them.
Tell them the good part.
The good part, William, is that no matter whether our clients make money or lose money, Duke and Duke get the commissions.
Well, what do you think, Valentine?
Well, it sounds to me like you guys are a couple of bookies.
I told you he'd understand.
And And he's correct. Brokers make commissions off our trades, and that's it. That's what they do. And that's basically brokers help us have access to market to trade. And what we also do is, like he said, we speculate on the price. We don't buy any physical products. Not like in stocks, you get a stock certificate, right? Or you get a piece of the company. In futures, you just basically speculate on the price, and that's it. Is the price going to go up, or is the price going to go down? Meaning, you make money when the market is either going up or the market is going down. You can make money both ways. Not like in stocks, you can only make it when it's going up, right? So what are futures? Futures is about standardized contracts for the purchase and sale of financial instruments or physical commodities for future delivery on a regulated community or commodity futures exchange. Now, what we do, what I do, is basically we don't buy anything physical. I don't trade any commodities at all. I basically speculate on the stock index, more specifically the S&P 500 stock index. Katulad dito sa Philippine Stock Exchange. It's called the Philippine Stock Exchange Index. Ibig sabihin yun, before there was futures being traded here in the Philippines. Meron futures dito back in the 80s, but it got banned because daming, alam mo mga dito sa Pilipinas, daming corruption. But there was a lot of insider trading, a lot of going on, so they had to ban it. So before there were people trading futures, but more on the index of the Philippine Stock Exchange rather than the individual stocks themselves. Okay, so basically before, when the futures started, it was basically purchasing of physical commodities, and I will show you exactly what that meant. So what we do is here, futures contracts are used by two categories of market participants or investors or traders. They're the hedgers. Those are the ones who produce and buy commodities, and the speculators. The speculators are us. Producers or purchasers are the underlying asset hedge or guarantee the price at which the commodity is sold. So basically the hedgers are basically, they produce the commodity, right? Or they purchase the commodity, physical. Those are hedgers. While speculators, they're portfolio managers or traders like me or us, day traders. We speculate on the price movements of an underlying asset using futures. Meaning what I do basically specifically is speculate on the price movement of the S&P 500 index. That's it. So here's a good example of what a hedger is. What are futures? So for example, here is the coffee bean farmer, right? This is in the Philippines here. That coffee bean farmer would supply coffee beans to their customer, which is most likely Starbucks Philippines. They sell coffee beans at 800 pesos per kilo, right? So what happens is, here's how they hedge, okay? So for example, if a corporation knows that it must purchase a specific item in the future, meaning let's say Starbucks futures, it may decide to take a long position in the futures contract. For example, Starbucks Philippines knows that in 6 months it needs to purchase 20,000 kilos of coffee beans to basically supply the demand of customers, right? So in order to fill in order, so assume the current price for the coffee beans, like I said, is 800 pesos per kilo, and the price of a 6-month futures contract, they're selling that per kilo is 500 pesos per kilo. So therefore, by purchasing the futures contract, Starbucks Philippines can guarantee a price of 500 pesos per kilo because it's a contract. So therefore, this reduces the company's risk because it will be able to close its futures position and buy 20,000 kilos of coffee beans at 500 pesos per kilo in 6 months when the 6-month contract expires, meaning they saved at least 300 pesos per kilo. If the current price is 800 and the futures price, they can get it at 500, right? Now, if Starbucks Philippines had not purchased the 6-month contract, right, and the price of coffee beans ended up increasing from 800 pesos per kilo to 1,000 pesos per kilo after 1 month, let's say after 1 month, the company. So therefore, The reason it did that, well, maybe there's some unseen forces, for example, storms, right? So it really depends on the supply and demand. So the company would be forced to purchase the 20,000 kilos of coffee beans at the price of 1,000 pesos per kilo. This would result in a greater expense for the Starbucks Philippines compared to the 500,000 or 500 pesos per kilo it would have been guaranteed by purchasing a futures contract. Without purchasing the futures contract, they would have been stuck at purchasing the price of 1,000 pesos per kilo. So that's why a lot of people, what we call is they hedge. A lot of companies hedge depending on what their economic, let's say you've heard of financial analysts, right? So they have a team of financial analysts that say, okay, we're speculating the price of coffee beans will go up. So therefore, they look at the price of a futures contract, maybe 6 months or maybe 1 year from now, depending what's cheaper for them, they will lock into that price. Okay, well, if they speculate the price of coffee beans to be going up. On the other hand, the other end of the hedging is basically the farmer. For example, the farmer, what they're going to try to do is going to try to sell a futures contract. So for example, the coffee farmer may agree to a legal contract that obligates them to sell 20,000 kilos of coffee beans at a date that is 6 months in the future. It can be 6 months, it can be 1 year, it can be whatever futures, what they agree on. So the current price for coffee beans is 800 pesos per kilo. And the futures price is, let's say in 6 months from now, would be 600 pesos per kilo. When the coffee farmer closes out its futures position, in 6 months, they will be able to sell its 20,000 pesos per kilo of coffee beans at 600 pesos per kilo. Now you can see basically they lost maybe 200 pesos per kilo. But if the coffee farmer had not made the decision to take this position in the futures contract and the market price of coffee beans had unexpectedly dipped to 400 pesos per kilo, they would have been forced to sell at 400 pesos per kilo. But here, since they bought a futures contract, it was at 400 pesos or 600 pesos per kilo. Again, it really depends on what they speculate, what the farmer speculates. Does he expect that the price of coffee beans will go down? If he does that, then he will purchase a futures contract to offset the decrease of the price of coffee beans. Nintindi mo yun na you understand this simple concept, yung hedging? Any questions on that?
Yes.
Okay. No questions?
Yep,
Clear?
clear so far.
Okay, good. So basically that's how hedgers use the futures contract. Again, hedgers are the ones who are producing a commodity, and this means the commodity is what? Coffee beans. And the one who purchases it is basically Starbucks Philippines or any type of coffee house. Okay. So now here are some examples of futures contracts. In agricultural commodities, there are wheat, corn, soybeans, and livestock, as in beef, pork. Interest rates, there are interest rate bonds that what some people trade, the 5-year, 10-year, and 30-year interest year bonds. There's the energy futures, crude oil. I used to trade crude oil and natural gas and metals. There's gold and silver. In fact, a lot of people, Marcello's now he basically trades silver right now. More specifically, he trades silver miners. The stock index futures. So basically the S&P 500, which I trade and which I'll be teaching, and also NASDAQ, which is basically, NASDAQ is the top 100 tech companies, while S&P 500 are the top 500 blue chip companies. It's a combination of tech companies, energy companies, retail companies, and so forth. While the Dow is basically the Dow Jones Industrial Average. That's another stock. That's another index. And also a lot of people who are futures traders, there's what we call the spot currency futures. We trade on the euro, the euro dollar, euro US dollar, the Japanese yen, and also the British pound. Okay. Again, before futures were traded in the pit, this is what the pit looked like. In fact, here is an explanation of what, and this is Chicago. I went to this place one time because I lived in Chicago. And this was down in downtown Chicago as well. So this is what the pit involves. Let me see. There we are. Oops, sorry. Press the. I keep on pressing the wrong one. Hold on.
If it's IBM ticking down or if it's Microsoft ticking up, he's going to make his decision whether he's going to buy or sell that order based on what he sees or feels.
Coleman's buying these. How many? Feels like total all day. 4.
In a routine day, I'm sure there's a lot of guys here who, you know, maybe 25, 50,000. Good day, yeah. 1,000 or 2,000 ticks, sure.
You make the decision to buy or to sell. No one tells you to do it. No one makes you do it. It's your money. If you're right, you know, you win. If you're wrong, you lose. I mean, it really is democracy.
The reason you have to remember it as if it was your name because of what? I need you to know as my hands move, you're able to say what you see. What do they say? That's not buy one. This is buy one. Okay? And if you said that, what would the broker do? They would do exactly what you said. Buy one market. That's not what you want to do. You want to do what?
Pay 1.
Pay 1. Or in your area, which is
10.
S&Ps, is pay 10. Do what?
Pay 2.
Pay do what?
Pay 3.
Do what?
Pay 70.
Good. And the only thing you're waiting on now is what?
Quantity.
The quantity. So if you see it, say it. You do not have to think about it in the means. What am I saying?
If you're in a yellow coat, you're a clerk. If you're in a colored jacket, you're a trader. A yellow jacket is an entry-level position. Somebody who is trying to work their way up to the next level, which is a broker or a salesman. But that is where you have to start. That is where I started. That is where everybody starts. And nobody comes down there expecting to be in a yellow jacket forever. They're going to learn, they're going to get into that pit, they're going to trade, and they're going to make a fortune.
See, exactly that. Hey, I was working...
So basically, that's what the pit was, and that basically it was being traded in there for until 2000, I believe it was 2006 or 2008, and everything went into electronic trading. A lot of pit traders didn't know how to do it electronically. In fact, they hated electronic trading. They're more to the pit trading. As you can see in the pit trading, what they did, how they executed trades is all about hand signals, all hand signals. Walang verbal, it's all hand signals. And that's what he was teaching them, how what they were communicating is basically hand signals, and that's what it was. So the E-mini ES futures is a contract that tracks, this is what we trade, the ES. This is what I'll be talking about more. It's about the stock index, S&P 500, which the symbol in futures is called ES. So the futures contract is basically ES is basically a S&P 500 stock market index. Again, what I had mentioned about the S&P is the top 500 companies, right? The largest publicly traded companies in the US. That includes Apple, Google, Microsoft, Exxon, which is an energy company. Also, that also includes whatchamacallit, Bezos company, Amazon, big 500 companies. Okay, this is a benefit to day traders, as we don't exclusively study just one stock, but we study the movement in the markets as a whole. Meaning, the S&P 500 index is basically an average of all the 500 stocks put in one index, and that's how the prices move in that index. Okay. So it's traded in the Chicago Mercantile Exchange, located in Chicago, Illinois. And it's how we enter that is through a Globex electronic trading platform. Okay. And the reason the E-mini was formed back in 1997 It allowed individual traders like you and I who have small capital to basically to trade. They created the E-mini rather than the standard mini or the standard futures contract. They called it the mini. So basically what a mini is, so like it's here, the current price of one ES contract is around, right now, I'm looking at my chart, it's 41.69. So you take 41.69 times 50. That's the value of one, not E-mini, not one E-mini, but one regular ES contract. So if I take that, that would be approximately over, I believe, 300,000 right now, because right now it's hit highs this in fact last week it was hitting, no, now last week it sank, but before that it was setting record highs. Now if I took this right now at 41.69 times 50, 208,000, you need 208,000 per to trade, just to trade one regular ES contract. Okay, E-mini futures is basically essentially the mini version of the large scale, which is the ES. It's 1/5 the size, and it's only traded electronically. Thus, what the E stands for in E-mini, it's traded only electronically. Therefore, it's more accessible to retail traders. Retail traders are like you and I, people who have small capital to really trade. Okay. The E-mini S&P 500, or otherwise known as ES, is the most traded financial instrument in the world. It has, they trade more than 2 million contracts daily. So there's a lot of volatility, which is actually good for traders. So you can get in and out of our positions easily, quite easily. Again, it's the world's most actively traded stock index with over 2.2 million contracts traded on a daily basis. Again, we'll discuss this 1 point. So here, I'll discuss this. One tick equals $12.50 per contract. Now, I'm just wondering what is one tick? What is a tick? So basically, a tick is an incremental price movement or fluctuation. So you will see how this price moves. So basically, if the price moves right now, the current price, let's say, is at this yellow one. This is a super dome. It's basically depth of market. That's what DOM stands for. So let's say one incremental movement is basically just from 31.19 to 31.19.25. So that's what, 25-cent movement, right? So that one tick movement, either up or down, equals $12.50. Therefore, if the market moves from 31.19 to 31.20 or goes down to 31.18, that's $1 movement, right? From 31.19 to 31.20 is $1. How many ticks is that from 31.19 to 31.20? 1, 2, 3, 4. 4 ticks. So $1 movement equals 4 ticks, but that in terms of that, 1 tick equals $12.50. So 4 ticks times $12.50 equals what? $50. So therefore, a $1 movement in this market equals $50 in profit, meaning the market is leveraged 50 to 1. For every $1 movement, you make $50 in profit. So it's a 50 to 1 leverage. Where in the stock market, it's not leveraged, basically 1 to 1. Now, here are, again, like I said, the tick value for ES is $12.50. Here are the tick values of the most commonly traded instruments. Again, like I said, ES or the S&P 500, $12.50. NASDAQ is basically $5 per tick. The YM, which is Dow Jones Industrial Average, $5 per tick. The mini Russell is $5 per tick. Again, remember I was saying this is the currency futures. It's $5 per tick in the US dollar. The Bitcoin futures, that's newly added, it's $25 per tick. However, just to trade that, you need a margin of at least $40,000 to trade. So that's not worth trading that. So basically, the British pound, $6.25, and so forth, right? So you have also crude oil, $10 per tick, gold, $10 a tick, and also here silver, $25 per tick. Okay. So there are two types, like I said, I previously mentioned, there are two types of investing in the market, in the futures market. There are investors and they're day traders, okay? Investors are in the market for the long haul. So often they wait weeks, months, years to make their money. That's like people who trade, who basically quote unquote trade in the Philippine Stock Exchange. They're not really traders, they're investors. Because to realize a profit in the Philippine Stock Exchange probably take maybe years, right, to hold until you see a profit. That was also real estate. They're not considered as traders, but they're considered as investors, right? They wait years to make their money. Whereas, again, this approach in terms of investors places retirement and savings account into the market with a simple premise that the market will go up over time, thus netting a profit to the investor. In terms of what they say here, you have to emphasize over time, meaning years. Okay, if you have to invest in years, that's basically an investor. Now, in terms of day traders, we see our profits or losses daily, on a daily basis, as we're in the market for as little as a few hours. In fact, most of my trading, I'm done within an hour and a half, and I'm done for the day. The principle of day trading is to make money off the fluctuations of the market. Whether it's rising or falling, we profit either way, either when the market is coming or rising or when the market is falling. So our focus will be on understanding the price action. And that's very important. Once you know what price action is and the momentum, it would be no longer necessary to spend hours on research like you do in terms of researching individual stocks, or even Forex traders. They have to scan at least a minimum of 26 charts, because those are the major currency pairs that to scan and search where's the best opportunity to trade. So basically, in what we do, we only specialize in one market, and that's the ES, right? The S&P 500. So it's a quick 5-minute market analysis is all we need. In fact, that's what I do. I just want to know where the overall trend is and what the immediate momentum is as well. And that's what I just need, just a quick 5-minute analysis, and that's all. Again, typical trading hour time is basically between anywhere from, at the most, I would say 2 hours, but I would say not never, but I've been averaging close to at least an hour or even less, depending on what your profit goal is. So when you're finished, your earnings are immediately available in your segregated account from the broker. You can withdraw it anytime you want. So why trade ES futures? First of all, it's easy to get started. To open an ES futures account to trade on your live account, you need to deposit a minimum of between $1,500 to $3,000 and a margin requirement of $500. That's a NinjaTrader brokerage. Now, in terms of margin, how we describe margin here, it's totally used differently than in Forex. I will give you an example of what margin is. For example, let's get out of here. I was keeping forgetting to get my notepad here. I'll explain what margin is. So margin is this. So for example, let's say you deposited $1,500 in your trading account. Okay, you trade one contract because that's what you allow, because it says here the margin is $500 per contract. So once you enter a position, either a buy position or a sell position, what they're going to do is take away the $500. That's your margin per contract, since you're only trading one contract. So therefore, your available money to trade is now what? $1,000. Once you exit or close out your trade, let's say you gained a $100 profit, right? You earned a $100 profit. Let's say profit. So this would be now 1,100, right? Once you exit that position, they will add back the 500 margin that they used. Therefore, your balance is now 1,600. So basically that margin is being used as like I always consider it as a entrance fee to enter the market to trade. It's like a buffer. So that's per contract. So let's say if you're trading 2 contracts, you need at least $1,000 in your account to allocate for the margin. Okay. So to at least trade 1 contract, you need to at least have what? Between $1,500 to, let's say, $3,000. Okay. But that's just trading in E-mini futures. Now, back in May of 2019, the CME opened a thing called micro ES futures, and that makes it makes it easier for the retail trader to basically trade on if they want to fund their own account. They just have to have a deposit of a minimum of $400 to $500. Again, the margin requirement though is only $50. See that's a difference of what, 10%, right? So meaning a micro ES futures, your margin requirement is only $50 per contract. However, the tick value, instead of being $12.50, is now 1/10 of that, which is $1.25. Basically, the micros is being used for people who wants to get used to trading the live market with a live account. That's what they do. It basically has a very minimum risk, since you're only trading what the risk is maybe $1.25 per tick, which is pretty good. Also, in terms of the E-mini futures, the E-mini S&P futures trade about an average of 2.2 million contracts a day. Again, the more the contracts are traded on a daily basis, the more price action there is, creating volatility, and basically you have no problems of getting in and out of a trade. Again, in terms of, like I said, the new micro ES, this is back in 2019, lowering capital requirements for smaller investors. Again, only requires a $50 margin requirement. Minimum deposit is between anywhere from $400 to $500 to open a live account, depending on which broker you use. And again, like I said, the tick value, instead of being $12.50, it's only $1.25 per tick. Again, why trade E-mini futures? First of all, it's what we call a level playing field, meaning if you have traders that are losing money, you'll have on the other end traders who are winning money. So there's less market manipulation, same level as institutional traders, meaning you trade in the same market where institutional traders are trading, as well as hedge funds, right? It's centralized, meaning it's regulated, not like Bitcoin or the currency or the cryptocurrencies. They are deregulated, decentralized, I should say. Decentralized, meaning it's tough for them to be regulated. Meaning there's a lot of things that money or cryptocurrencies can be stolen. Your account can be hacked and so forth. That's why it's not regulated. In this one, why I circle this, basically in this one, you'll never see this in Forex. It's basically, you see the number of sellers and the number of buyers here in terms of how many contracts are being bought, how many contracts are being sold. You can see the 10 best bids, which are the selling, and the 10 best asks, which is basically the buying, along with the associated volume. So basically, you can see the real volume that's going on. This is what we call level 2 data. So this transparency of the market's orders, you can see all the orders that's going on at each price level, basically allows ES traders to see where and how many orders have been placed ahead of them, meaning here's the current price right here, and you can see how many people are buying and selling at this particular price level. Okay, so day trading is a zero-sum game. If we lose money, we are giving it to another trader. Basically, that's what it is. If we make money, we are taking it from another trader, and vice versa, right? So basically, there can't be all winners at one time, and there can't be all losers at one time. It's basically, if you win, you're taking money from another trader who's losing. So again, you can easily take a long or a buy position and also a short or sell position. You can either buy or sell to make your profit with ES futures contracts, and there's no short sell restriction that like you have in stocks. Again, there's no low prep time, no homework, only pre-market analysis that lasts maybe 5 minutes, and also the high leverage, meaning every $1 the ES market goes up, we can make a $50 profit per contract. And that's what I just said, a 50 to 1 leverage. Every $1 movement is a 50 to 1, 51 leverage. Low commissions right now, a round trip, or meaning what I mean, RT is round trip. So each trade you take, once you get in and out, it's $3.98 per trade. That's the set fixed commission. That's with Ninja Trader Brokers. That's who I trade with. I'm not affiliated with them personally. That's why I trade, because they're one of the least expensive commissions out in the market right now. There's a tight bid and ask spread. So basically, if in Forex, usually their spreads fluctuate a lot, especially during high economic news releases, where in futures, it's fixed. It's only one tick, or $12.50. And you only incur bids, or should I say spreads, when you do a market order. Most of our orders that we place when we trade are limit orders. So therefore, there is really no spread. The spread is only applied when you do a market order. I can explain to that. I can explain to you guys what the difference between a market order and a limit order is maybe at the end of this session. So again, in futures, there's no such thing as pattern day trading rule like you do in stocks. In stocks, you have a pattern day day trader rule, meaning you need to have a minimum of $25,000 in starting capital to basically day trade stocks, and that's in the U.S. I don't know here in the Philippine Stock Exchange if they're. I think somebody told me that they have a pattern day rule, but I don't know what's the minimum capital. I don't think they have one, because I really don't, because I think the minimum to start trading the stocks, I think, is like 5,000 pesos, right? I think that's what it is. And here is this is all the commissions here. For example, the ES here, you see here, it's basically $1.99. Depends on what type of platform you get. Is it the lifetime license or you lease it quarterly, or you get the free one? I would not even recommend the free one, because it's gonna be hard for you to trade. So anyways, what I have right now is a lifetime license. So basically, I'm getting 189 times 2 is 398. That's how I got the 398. Again, the commission there is basically 92 cents per trade. Again, here are the margins. Again, for the ES, it's $500 per contract. That's the margin. For micros, it's $50 per contract. And you can see here, Bitcoin futures, $40,000 margin is required. Pretty high. And here are your other ones. You have the cattle, you have the cow, the bellies of the beef, the cattles, the hogs, and also the euro, or should I say the currency futures as well. So in Forex, first of all, Forex is the largest market in the world. It's a $5.7 trillion market. And unfortunately, if it's the largest one, it's also the most manipulated market in the world. For example, as you can see here, Barclays, Citigroup, and this was back in May of 2019. Barclays, Citigroup, and JP Morgan were fined $1.2 billion for Forex rigging. They're rigging the price of Forex. And the thing is, they basically pled guilty. You know, they pled guilty about this, and they don't mind getting caught, because first of all, 1.2 billion for them is not that much, since they're making billions in Forex. That's why they'd rather pay the 1.2 billion. If they get caught, they get caught. That's how they are, because that's how banks are. They can afford the 1.2 billion. Again, here's another one for HSBC. This is back in 2018, January 2018. HSBC to pay over $1 million in fines for cheating clients. Cheating clients in terms of manipulating currency trades. You can see here, using currency trades to swindle its own customers out of tens of millions of dollars. So they were caught, so now they had to pay a fine. $100 million. Again, to them, 100 million is nothing. Again, the advantages of trading Forex. First of all, low cost to get started. This is about Forex. So Forex, you can start as little as $50 to $100, depending what broker you use. Low prep time required. Yes, it really depends. Depends if you're just concentrating on one currency pair. For example, the Euro USD. My trading coach, one of my trading coaches, only concentrates on one currency pair, and that's the euro dollar. Other than that, he doesn't look at any other major ones. Okay. High leverage in Forex. You can get the leverage can range from anywhere from 100 or let's say 50 to 1 to maybe as high as 500 to 1. And with that high leverage is basically a double-edged sword, because yes, you can make money easily, but you can also lose money just as easily. So it's really a double-edged sword. Again, Forex is also easy market to learn, but the disadvantages are the higher risk, again, due to the high leverage. Also, you'll be competing with the other institutional traders, the traders that have, should I say, lots of money to move the market. You'll have the institutional bankers, the banks, as well as the hedge funds. And also, not only that, you have what we call the government intervention. Here's a classic example. I had a friend who was basically great. He was a good Forex trader. He specialized in the Swiss franc, the US Swiss franc currency pair. And he was at one point, he went to bed, he placed an order, an overnight trade, and he was already up, close to $10,000. His account was around more than $25,000 account. And he was already in profit of more than $10,000 since he held that position for more than a week, I believe. And it's already been up, generating profit of 10,000. But the thing is, he had a profit target of maybe around 20,000. That's what it was. And so what happened during the overnight, he was expecting that he was the price was gonna hit his profit target. But when he woke up, he found out his whole account was zero and he lost everything. He didn't have a stop loss. And the reason why he lost it was because the Swiss government decided to devalue the Swiss franc. And so the price of the Swiss franc went down, and along with his profits. Oh, there's annoying going on with the audio. Does anyone else experience anything with my audio? Is it just Raymond, or please let me know.
We can hear you okay.
You can hear me?
We can hear you okay. Yeah.
Okay, thanks. So again, in terms of disadvantages of Forex, there's no price transparency, meaning what I mean is in Forex, it's again decentralized. You have 5 different markets. You have the Asian market, you have the Euro market, you have the London market, you have the US market, and you have, what's the other market? You have the Euro, British, and the Asian. When they call Asian, you have the Japanese market as well.
Yeah.
So those are 5, Tokyo market. So you have 5 of these markets that you're basically, they have each of these markets. It's not really centralized where they go by one price. For example, the price of a US, let's say a Euro USD currency pair may be different in the US market than it is priced in the Tokyo market, the Japanese market. That's why there's no price transparency. And also you'll notice the volume, you won't see any volume data because it's basically what we call artificial. So basically makes the price move? Well, not only the brokers, the banks, they're the ones who make the price move. You just follow the banks, what they do. And usually during major news releases, that's when they also basically manipulate the spread as well. So that's Forex. Now, in terms of stocks, the advantages of stocks, there's a lot of stocks to trade no matter what, right? So you have a lot of opportunity to trade whatever stock you want. And on those stocks, there's lots of public information available where you can do your research. However, that's the only disadvantage. You have to put a lot of time and effort just to do the research. And that's why a lot of people here in the Philippines, they basically get their information from who? The stockbrokers, right? Like Cole Financial, right? They said, well, here, maybe you should put a position here and so forth. We believe that this stock is going to go up, right? Or get out of position because we believe this stock will go down. You're basically following their advice rather than the research that you go by yourself. The disadvantage of stocks, again, I don't know about here in the Philippines, but in the US, you need to have at least, the day trade stocks, you need to have at least $25,000 minimum in your account. And again, like I said, one of the disadvantages is time consuming, tagal mag-research. And also there's some short selling restrictions. Alam ko dito sa Philippine Stock Exchange meron yun, pero I don't know the detail of what it is. I think you can only short if you own the stock, but you can't short when you don't own the stock. Again, there's some market manipulation. I think all markets, there's some sort of market manipulation. Here in the Philippine Stock Exchange, they catch the people who do the manipulating. In fact, they get fined. Again, the only disadvantage here in the Philippines is there's low volume. Therefore, you cannot day trade. Like I said, the only way you can make profit is if you hold that stock for a certain number of years, or even maybe some months, but years most likely. Now, in terms of futures, advantages, again, low cost to get started. Just like Forex, low cost to get started there, depending on what broker, between 50 to 100 at least minimum. Here now, since they introduced the micros, you can start trading a live account at $400. With the E-minis, the minimum is at least $1,500. That's what I would recommend. The advantage is level playing field, meaning a zero-sum game. If you win, you basically taking money from a losing trader, and vice versa. If you lose, you're giving it to another winning trader. There has to be a win on the other side and a losing trader on the other side as well. Low prep time, like I said, for me, I always teach my students around 5 minutes, and that's it. I always teach my students what to look for. High leverage, basically 50 to 1 leverage, and very easy market to learn. And the reason why, because the thing is, in the ES, specifically the ES, the pattern repeats frequently each and every day. Once you see that same pattern, you can take advantage of that and may be profitable. And that's why I like trading it, because I always see that pattern all the time. And again, there's no short sell restrictions. You can make money going down as much as you make money going up. In fact, we make more money when the market is going down. That's why I always tell my students, that's because you're learning how to trade now, because there is going to be an impending crash in the market. The market has been going up for the past 10 years with no contraction. Usually it takes maybe a 5 to 7 year average where it would contract and then it would expand again. That's the usual market. But for the past 10 years, it's been straight contraction or expansion. And what they say, the law of averages, there's no, if it keeps on going up, there's going to be most likely a severe crash or correction, what they call a correction, since it's been going up for the past 10 years. And like I said, once you learn how to trade when the market is going down, you'll certainly make money. In fact, you make more money when the market is going down than it is going up. Disadvantages, again, because of that leverage, you also have higher risk as you would in stocks, because in stocks, again, the leverage is 1-to-1. When you make $1, when the market goes up or the stock goes up $1, your profit is $1. It's 1-to-1. There's no leverage. Again, disadvantages, you're also trading against the institutional traders, the banks. A lot of banks trade in the futures market, especially the ES, and also against hedge funds as hedge funds again, just like in the Forex. And that's mini ES futures. So here's how, my typical trade is like this, and this is back in 2020. Let me see if we can play this. And okay, let me explain this. So I can see here, my analysis at this time when the opening was basically, you see the trend is kind of going down, right? So this red here, meaning I'm putting a pending order to sell at this particular price point. I'm hoping for the market to come back up and hit my price and come back down. And that's what it did. Once it hits my limit order, what we call a pending order to go down, the software would then create your stop loss automatically, and then your profit targets, whatever you input. It's going to create your automatic stop loss and your automatic profit targets. So here. So see what's going to happen here. I'm speculating that the price will go down since I see the trend going down. So what I'm going to do is I'm trying to find an area, high probability area there. I entered a limit order, meaning I hope to sell. The price will go down at this point, hit my price, my target, or where I want to enter the market there. It hit it, right? So I'm speculating this price will go down. I'm speculating that it's going to go down to this level, hit my first profit target, and down to this level, hit my second profit target. I basically have 2 profit targets. I think I'm trading here 3 contracts. Automatically also plots a stop loss, meaning if the price goes against me, it hits the stop loss. At least I minimize my loss instead of getting more losses. It would limit my loss to the stop loss. So here it's going down. It already hit my first one right away, and this is basically in real time in that time. So it's not fast forwarded or nothing. This is real time. So basically this whole trade basically took 3 minutes, and the profit, I believe, was what, 600. Let's see when it goes here. Let me see this. This is back in 2020. So this is how what we call day trading. You're done in less than 15 minutes. That I would call that's a day for me. Let me see this. I moved down my profit target down here. At the same time, my risk was up here. Now I lowered it down to 1 tick. So meaning I'm risking only $12.50 to basically, this is how many points is this, around basically win $600. I'm only risking $12.50. I think it's 550. I think that's what it was. Let me see.
Yeah. Wow.
So let me see. It's going to hit my target, and that's why we'll speculate there. It hit it. So I think I got that. That's 575 gross. 575 should be good in terms of my net. So that's 444 times 3. It's basically what it is. So we're looking at 561.68 net. And that's a day right there in less than 15 minutes. Again, most of the beginner traders, they'll be trading 1 contract, because that's how much, let's say their capital can afford. So basically that whole trade right there, that's 500, was it 575? If that was that'd be at least a $300 trade in what, less than 15 minutes. You're done for the day. Now, if you can do at least $100 a day consistently, would you guys be happy? $100 consistently every day.
So happy.
Right. And you're basically doing it at the most an hour and a half, and you're done.
Yeah.
Right. Let me see here. Just go back here. So here's like, for example, here I'm trading around 2 contracts at this time. 2 contracts. For example, I had a trade here, I let it ride. I basically knew where my target was. I made what, $1,400 in that one trade for the day. 1,500 gross with commissions, $35.52. I made 1,400 in one day. Now you can see here, I entered, look at this, 11, what's the time here? 11, let me see here, 11, 5:02, right? And I got out at 5:56. So less than 1 hour, made 1,400. Again, here's another one. This is back in what, November of last year, November 2020. Yeah, November. This is another one, November 3rd, the next day. This was November 2nd. Next day, market was moving again. I made another 1,000, and that was basically, here's the entry time, was basically 3:04. Got out at 3:04 and got out at 3:39. Less than 45 minutes, close to maybe 30 minutes, made over 1,000 total for the day. You can see here is 1175, 1148. So that's a good day. I'm only trading 2 contracts. So in terms of trading full-time, day trading full-time is not for everyone. I always tell this to my students. There's a lot of companies out there stating that you can make this much. They market that they have a mansion, they have all these Lamborghinis, but that's not what it is. Kaming lahat dito, most of us here are Christians, and basically our focus is not about the money. It's basically, for me, it's really the process, how to learn the skill. Like, for example, what I do is I've been blessed with a skill how to basically look at the market on a probability side rather than the money side. The money will come if you become consistent in entering your high probability trades. That's the key. A lot of people think that's how much money I can make. It's rather than minimizing your loss. How much money can I lose? It's not how much money you make. The consistency comes, once you have the consistency, the money will come. And basically our focus is not on money. My focus is not on money. It's basically my focus is on making consistent decisions or entries and trades where I know it's going to be high probability entry. And that's what it is. So trading full-time is not for everyone, but it's good to know how it works on a more practical term. I believe everyone can learn to trade, but not everyone has the discipline. That's what it takes. And our patience. You can, each individual, I always call trading a journey, because basically, if you've been sa military dito, sa training mga military dito, mahirap. The people who fail, kasi kulang sila sa discipline. Even sa States, if you're in the Marines, they teach you to be disciplined, but if you don't allow yourself to become disciplined, you're kicked out. Hindi ka pasado. Ganun din sa trading. You learn to become disciplined. You learn to become patient. Parang sa di ba? The fruit of the Holy Spirit. You ask them for you to be patient. Ganun din, to be more disciplined, self-control. So not everyone has the discipline or patience to learn. But if the thing is, if you're willing to learn, willing to be coachable, you can easily do this successfully. There are no secrets. You either learn by working hard and practicing. That's what it is. You have to practice, or you don't. There are no shortcuts. Most trading academies make you believe that by buying a course, you will soon become a professional trader and earn a lot of money. Be careful. It's not that easy. Trading is not easy. Each person has their individual learning curve, or their individual way how they become disciplined, right? Kasi mahirap kung sa pride mo. Mahirap ka kung mataas ang pride mo. And you'll become, should I say this? You will eventually become a humbled trader. The market will humble you. Because you think you know about the market. Oh my God, I've been to that. In fact, like I'm going to tell you this right now. Through my journey, my trading, I've lost more than $100,000. That's I consider that as my college tuition in trading. And what I tell my students, I don't want them to lose that much, but that's why I would rather mentor them. If they start doing their trades, I tell them to do it on a sim trade so I can evaluate how they enter trades and also what they're thinking when they enter a trade. So again, be careful, it's not that easy. And that's what I always tell my students. If you do it well, if you really put time and effort in it, you'll be able to learn how to trade. And the thing is, you'll become profitable. But again, this isn't a business. It's not considered don't consider it as a hobby. If you consider it as a hobby, then you won't care what you're doing, because it's basically, oh, hobby lang to. Hindi naman business ko to. You have to consider it like a full-time business talaga. But the thing is, the cost of doing this online business is a lot cheaper than having a brick and mortar business, right? Because you have to at least get a loan for what, 100,000 pesos at least, right? So again, it really depends on how you have to look at this as an online business. Okay. So let me see. It says here, if you do it well, yeah, you'll earn a lot of money. In fact, that's very life-changing. It really is. Once you learn, you'll eventually start earning some money. Again, $50, $100 a day. If you do that consistently, you just build up your account. But can you imagine $50 a day? Let's say there's 5 trading days per week. So that puts it at what? 2,500, right? Am I right? Calculator. Let's say $50, just at least $50 a day times 5. Yeah, $250 a week, right? So $250 a week times 4. Let's say you make $1,000 just doing one, and that's only $50. You can easily make, I'll tell you, with the strategy I teach, you can easily make $100 a day, easily. So at $100 a day, that would basically give you what, $2,000 a month supplement. It's actually pretty good. So again, you will learn, you can earn a lot of money. You can basically change your lifestyle. And again, you'll have more time spending with your kids or your family, or doing whatever you want to do, or even work a full-time job. So in my opinion, you can make a lot of money with day trading, but only if you really focus and are ready. Most people are not willing to really challenge themselves and take control of their emotions. Like I said, I've coached over 100 students, and most of them, I'm going to tell you this right now, I'm being transparent, most of them quit because they thought, they always had this this expectation, this false expectation where, well, I'm going to be a millionaire in terms of pesos within 2 months. And they see, wow, it's really hard. Yeah, because the thing is, you have to control your emotions. Yeah, like in some Bible, it said there, you have to disconnect your emotions from the money. If you're connected with that money emotionally, it's gonna put a hamper on your trading, because you're connected to that money. So if you're gonna lose that money, you're saying, ay nako, tatalo ko tong pera. But the thing is, it's really focusing more on the process, right? Rather than how much money am I going to lose or how much money am I going to win. I have some traders who made, let's say, $300 in less than 15 minutes. This is the iisip nila. Well, if I made it $300 in less than 10 minutes, I'm going to trade more, because the more I trade, the more money I'm going to make. What happens? They give back the $300 they make. At the same time, they lose more. So basically, one trader made $300. He ended up losing 500. So that's what happens. You have to control your emotions. You have to know when to quit and when to stop if you're in a losing trend. So again, if you focus and you're ready, and again, you have to control your emotions. Although we don't hear a lot about failures, like I said, a lot of people do lose a lot of money, myself included. Like I said, my aim is always to be transparent with you, and I always try to share as much as possible for you to understand the reality of the trading world and of a trader's life. Okay, so this is the chart basics. We'll talk about this tomorrow or Wednesday. On Wednesday, I'm going to help you set up your charts. I'm gonna send you guys a video on how to set it up. And if you have any difficulties from that point on, we can start doing that in class. Let me see here. Do I have any? No, none. Do I have any questions? Any questions out there? Any questions right now about what I just talked about?
Actually, I have three, Dom. So, well, we could answer it on the next, for the interest of time, we could answer it in the next session. But I just want to
Okay.
have somehow a context on how do they decide on the margin requirement. Just curious. Yeah.
How do they well, I don't know. Depends on the market. That's basically fixed. I don't know how
okay.
it's fixed. It never fluctuates.
Okay.
So
All right.
it's
So,
always been there for a long, since, like I said, I've been trading since what, 2013 in the futures. It's never changed.
I see. All right. So that's one. Two additional questions would be, so if you is the account or the live account be, on a ladderized setup? Like for example, you start at micro ES and then
Yeah.
eventually you can get to the mini ES.
Exactly. Tama. I always tell my students, if you want to trade your live account, start off with a micro and build it up until you're able to trade the regular one. But here's the thing. I also tell my students, I'm affiliated with a lot of prop funding firms where they will fund you at the minimum of $25,000.
Wow. So that's the opportunity there.
Right. You have to learn you have to have that edge to trade that. But the thing is, you have to pass their evaluation. The thing is, their evaluation, usually I get discounts in their evaluations, and they usually cost less than $100 to enter their evaluation. But the thing is, once you pass it, you'll get funded with no risk to your money. And your risk is basically the cost to enter that evaluation.
I agree. Okay, but it's a micro ES would be the good place to build the discipline muscle basically. Right. Okay, last question would be this is probably a stupid one.
No, there's no stupid question.
All right, for the flat rate commission, so regardless of how much you take profit, it's the same 398 round trip, regardless if it's 500 versus 50
per contract.
Per contract.
Right. So if you're trading two contracts, that's gonna be 398. So that'd be 398 times two.
Yeah.
Right. Right. 798, I believe it is.
Okay. That's it for me.
Okay.
Thanks, Dom.
Okay. Good. Thank you for the questions. Sino pa meron? Wala na?
So the cost of each trade is the commission and the spread, if the spread applies.
There is no, if the spread applies. But when we trade, I don't advise trading market, what we call market entry. We usually enter the trade by limit order. Like you saw me in that example I showed you. I put an order there because I know that's where the price is going to hit. It hits that. There's no spread in that one. But however, you want to, let's say some people want to chase the market. They want to enter, well, I want to enter right there because I don't want to lose this. I don't want, this market is really going down. I'm going to chase this. And they entered a market order. A market order will not place your order at the price that you wanted to enter. Sometimes the slippage, it may be a different price. So you'll also have slippage as well as what we call the spread. So it's always advisable to have what we call a limit order.
There is slippages, even if it's electronic and direct to the center.
There's slippage. Even in Forex, there's slippage. Depends on how fast it takes your order and how many, for example, if you're buying, right? If you're buying and how many basically sellers who are going to take that order when you get out. If there is none and it takes some, maybe there's some latency in your connection, there's going to be slippage.
On average, how many ticks is a slippage?
It really depends. It does. Average, there can be sometimes it can be 4 ticks. It can be 4 ticks or sometimes 5 ticks. That's depending on a market order. Again, there's some market order.
How often does it happen, the slippage? Is it rare or is it?
Well, it depends on the volatility of the market. If the market, if there's not really high volatility, there's going to be not that much slippage. In fact, there will be none. But if there is like high volatility, you'll get some slippage, definitely. but I don't know what the average, depending on how volatile the market is.
I was thinking all you need is to earn one tick because the commission is low enough. One tick would pay for the commission. But if,
Yeah, but you're gonna be.
but with the slippage, you have to make like 5 ticks.
Mahirap, that's called scalping. Usually when I scalp, I'll take maybe 4 ticks. Yun, 4 to 6 ticks. Pwede na yan.
You know slippage after the fact, right? So you're hoping there's no slippage.
Right. They usually don't get slippage unless you're trading a major news release. That's when you get a lot of slippage. Okay. Any other questions? So Wednesday, like I said, I'm gonna be sending you guys a video on how to download this platform, right? And if you have any issues with that, I'll help you guys download it during class. Okay.
All right. Works for me.
Okay. So thanks for attending. See you guys on Wednesday again at 7 p.m.
Thank you
Okay.
very much.
Thank you.
Thank you very much.
Thank you so much.
Okay. Take
Good
care.
night. Thank you.
Good night. Bye-bye.